Okay, let's talk about GDP growth. President Trump and his director of the National Economic Council have often said that GDP is going to go to, well, the president said 6%. That's wildly optimistic when you take a look at economic growth. I want to bring in, well, let's listen to what the president had to say about it. Play the president.
Well, what'll happen is at the end, whichever the administration is, in years from now, they'll make it and maybe can even make it more generous if we can get the economy like it should be. The economy now has hit 3%. Nobody thought it would be anywhere close. I think we could go to 4, 5, and maybe even 6% ultimately.
We are getting 3. And it may be 4 for a quarter or 2. It may be plus. I don't know. But that's all to the good.
It's not really true. Let's bring in our friend Caleb Silver, who's Investopedia's editor-in-chief. On Investopedia, just to remind people, because we talk about GDP, gross domestic product is the total monetary or market value of all the finished goods and services produced within a country's borders, all right?
It's a health check.
It's a health check of the economy. It's the broadest check we have. Let's take a look here. This is the recession. You remember 2009? That was negative GDP. If it's above this line, we're not in a recession. If it's below the line, we're in a recession. We're now at 1.9. The new bar here should say 1.9. There hasn't been a 4 since the year 2000.
Right. Those are rare, and you see it in growing economies, 4, 5, 6%. But we're a mature economy, and this has been the longest economic expansion in U.S. history. It's hard to sustain that type of growth. We're at 2%. We call that barbecue growth, right? Not really blazing, not really out, but not really growing that fast despite a lot of interest rate cuts.
But not a recession.
But not a recession. And factor this in compared to the rest of the world. Weren't numbers actually better today than expected?
Better than expected, but not on fire. It's 2%, 1.9% growth. Around the world is not very healthy. We may be the cleanest dirty shirt in the hamper, so to speak, but the economy is growing. Unemployment's low. Right? You haven't seen this type of unemployment in a long time. And so the economy is not in a recession. At the same time, business spending, manufacturing, that is slowing. And the consumer has been holding up the economy by doing a lot of spending. Cuts in interest rates help that, but they're starting to weaken a little bit, too.
Let's take a look at what Investopedia said about the federal funds rate, because we're going to be hearing about that very, very shortly. This is the interest rate that banks charge other banks for lending them money from their reserve balances on an overnight basis. This is basically a benchmark rate. Now, let's take a look at the chart of interest rates. As you see, we were in close to zero from 2008 to 2015. We were going up all the way since 2015. We've been going down now.
We are about to have our third rate cut since June. The Federal Reserve is probably going to cut rates just around 2 o'clock right now, which means the federal funds rate will go lower, and that's really the rate that credit cards are based off of, car loans, home loans are based on. So we've seen mortgage rates dipping down, and the idea is if you cut rates, it inspires more spending by businesses and by consumers. More spending could lead to more expansion, more hiring, and more consumer spending really helps prop up the economy. And the problem is this has been happening now this will be the third rate cut, and consumers are starting to weaken in their spending, and businesses we know are holding back.
Okay, but let's put all this aside. Look at the stock market. This is a huge positive for the stock market. The president connects his success to the stock market, and talk to any investor. Remember, investors aren't just rich Wall Street guys. There are 401ks, there are retirement accounts. People look at the markets and they feel great about it.
Yeah, stocks are at all-time highs if you look at the S&P 500. Stocks in the economy are very different, though, and you guys, I know you know that. But not everybody's invested. About 45% of the country is invested. Some are more passively invested through 401ks. Stock market's high. It's been a great time to be an investor in stocks. Bond market, too. At the same time, the economy is just feeling like a little bit soft right now.
All right, Caleb Silver, you can get a lot of these, as we do, a lot of these explanations at Investopedia.com. Thank you for being with us. Hey, MSNBC fans, thanks for checking out our YouTube channel. Subscribe by clicking on that button down there and click on any of the videos here to watch the latest interviews and highlights. You can get more MSNBC for free every day with our newsletters. Just visit msnbc.com/newsletters to sign up now.